Oh yeah. All right. Well, guys, we have 9 minutes left before the results are out. So let's get ready. Remember, guys, our first initial reaction is not going to be the true reaction. The second reaction will be the true reaction. All right, that's usually when Jerome Powell is speaking. So whatever he says goes for the market, not exactly the interest rates. All right. The market will react more emotionally to whatever Jerome Powell says. Of course, interest rates matter, and that's the reason why we have a reaction. But usually the markets tend to follow the emotional side of things first, right? Snapchat back above $10. That's great. Uber looks good, but not heading into FOMC. There is an entry here, but especially for a starter position, but I don't think I'll take it. Okay, things are looking great. Mobileye is flagging on the 15-minute time frame, but it looks kind of ugly. So we'll definitely look for a pullback entry on Mobileye. Obviously, Mobileye, I'm looking for at least a pullback to around 38. Yeah, I mean this is clearly a momentum name. It's completely influenced by momentum and volume. So a pullback entry will be the best. Hey, Joel, what's up? Nothing much. We are just looking for a big move here. So obviously, again, initial reaction will be not the true reaction. The second one will be more of the official reaction. And the reason for that is that, like I explained earlier, the market will mostly focus on the emotional side of things first. So whatever Jerome Powell says, they'll get emotional about it, right? And we'll follow through with that sentiment first, and then interest rates will be slowly priced in after that. But usually that's what we get. So the second reaction tends to be the true reaction at the time of the market open. All right, 5 minutes left. 5 minutes left. Oh boy, 5 minutes left. Okay, we have almost 4 minutes now. The results are coming out. The results are coming out. We can either get the that 25 BP. The market is running up into the results here. The decision for the first year. The first interest rate hike of the year is coming, guys. Be prepared. Let's see if my insight and my bias that I've told you guys in the market summary is going to happen. Okay, okay, 3 minutes, guys. 3 minutes. Ooh, Carvana. What the hell? Okay. Alright, I see you. Oh, I'm in a new weekly high already. The momentum is insane on that one. Yeah, but Mobileye, again, I'm going to be looking for a retest around, or pullback back to like 38 at least for an entry point. I think we can see some, I don't know, some maybe another pullback entry around 37.50, but once we pull back to that area, that's going to be a little bit too suspicious for me to try to go long, right? That means we can fall all the way back down to 36 if we retest 37.50 and if we don't hold it. So there's a good chance that if we do pull back, then we can see a nice bounce around 38, and that will be a good buyout point for me, a nice support buyback. Hey, do nothing, what's up? You said scared for FOMC. Oh, well, that's why I'm here, guys, right? Everyone can be nervous. I'm a bit nervous on what's going to be the earnings, not the earnings, the reaction to the results here. All right, I mean, so far the initial reaction to the upside. I mean, we didn't even get the results yet, so. Oh, we're pumping up higher though. Uh-oh, what's going on? This could be a little bit of a spoof run. Be careful, guys. Be careful. You like Mobileye? Nice. Yes, yes, yes. I love it too. Oh, option premiums are going crazy right now. Oh, here we go. What is it? 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 Oh, we're diving. We are diving. We're diving, guys. Uh-oh. Whoa, 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 whoa. There's a slight chance that we can see a nice run up when Jerome Powell speaks. What is the interest rate here? I'm not seeing the news right now. No one's posting anything on the news. Why? Oh! Quarter of a point. There we go. 25 BP, guys. 25 BP. 25 BP. All right, I'm out of my puts here. Okay, I'm out of my puts for now. The market reaction to this is going to be positive, I think. But again, that initial reaction to the interest rates are not going to be too factored into the markets, because remember, Jerome Powell, when he speaks, all right, the sentimental, the emotional part is going to matter a lot more to the markets. There are some stocks that are not even budging. Okay. Yep. Yeah, I think the market's gonna wait on Jerome Powell. Oops, 23 minutes. Not 23. What am I saying? It's like 11:30. Jesus. All right, here we go. Here we go. Here we go. Here we go. Let's see how the market prices this in. Remember, the market has been discounting this potential slowdown and interest rate hikes for the past month, for all of January, right? Since this year started, after that last FOMC meeting on December. So this could almost be like the sell the news type of deal too. So watch out, guys. Watch out. Well, at least I'm glad I got out right there as we were pushing lower there. And the markets are really going to move when Jerome Powell speaks. So, but there we go. We got that 25 BP. 25 BP. They're expecting ongoing increases. Here, let me show you guys the link here that I'm reading. This takes the target range of the terminal interest rates to 4.5% to 4.75%. Okay, 4.50 to 4.75. All right. That's the federal funds target. Federal funds rate. Let's see. Officials said they would determine the extent of future rate increases based on factors such as the effects so far of the rate hikes. Again, look at that. They're kind of afraid of what the consequences are for this huge and really quick interest rate hike cycle. All right, so they don't know the exact impact just yet. And remember, they're wanting a very soft landing. And they don't know if they've achieved that after this crazy rate hike cycle. And that's the reason why they're slowing down for now. And that's another reason why the market has been so bullish in the first month of this year. All right, because we know that the interest rates, the terminal interest rates are going to be around 5%, and that's when they will start to pivot and go for a more loose monetary policy, since they're tightening so far since last year, and so they will most likely have to slow down. And that's exactly what they're doing, right? They're going to have a very hawkish rhetoric, or they're just going to be wishy-washy, like I said in the market summary of the newsletter. But it's anyone's guess at this point of what Jerome Powell will say, especially after, I'm pretty sure all the Fed governors are looking at the market and seeing that the market is leading higher. The bond market is telling them that they're expecting to see a pivot soon in the markets as well, a pivot in the interest rates. So, and look at this, really nice reaction to the upside so far. Very nice. Ooh, tech stocks are going crazy right now. Let's see. Adobe. It's gone. Yep, look at that. Is Apple going crazy too? Nah, not as much. Amazon. Netflix. Oh, that's a nice bump in Amazon Netflix. Microsoft. Nice bump as well. Okay, I think we can be bullish here. I just need to wait for Jerome Powell. That's all I need to wait for. That is all we need. That's all we need, guys. And we're good. Okay, 5 more minutes left until this candlestick closes on the 15-minute. We're back above 405. We were in this area earlier. Okay, this is a rather sharp move higher too. I'm liking what I'm seeing. It's going to be a little bit hard to try to determine where we go next, since we're not, well, Jerome Powell's not speaking yet. Wow, look at this run up. Woo! All right. Huge uptick in volume too, to the upside. This is what you want to see. Yeah, the market likes the upside for now. Oh, those Uber calls are moving. Uber calls are moving. Let's go, let's go, let's go. Hopefully you guys can hear me. If you can't, please let me know. Alright, I'm glad I sold those puts. I think I had to test the 403.50. I got filled in as we were moving back up. It's kind of delayed because everything was kind of going crazy. The premiums were jumping around right before we saw the interest rates results come out. The final decision for the year, well, not the final, first decision of this year. Hey, Joel, thank you. Thank you for confirming. Oh, 3 likes. Hey, that's what's up. Thank you, guys. I think at some point we can grab some calls for SPY. But I think we should wait until we pass 406.50. Okay, I think CNBC should have, yeah, CNBC should have a link on YouTube for Jerome Powell's conference. No? Oh, they don't have it yet. Huh. Oh, they don't have it. No? Oh no, they do. That's weird. I didn't see it on my first search. Alright. Here we go, guys. We'll watch it together. He's not out yet though, guys, so just a little reminder here. He comes out maybe 3 to 5 minutes after 11:30 or 2:30 for anyone in the Eastern Standard Time Zone. EST. Ooh, CSIQ is looking so good. What a textbook bull flag. Oh, if this one doesn't work out, I'll be angry. So good. And Uber is just getting a huge inflow in buying. Huge inflow. Okay, that 15-minute candlestick close. Let's take a look at the 2-hour. We're not overextended at all. We still have a lot of room left to move. That's all I know on my side here, on what my chart says. But we gotta stay patient here. We gotta stay patient. This is the entire month of January here. Look at that. Very, very nice. Nice uptrend. That's what we want to see. Oh, I got an alert again on Rocket Lab. Is it back to 5? Is that what the... Yeah, it's back to 5. Even the small cap stocks are moving, or the poop trash stocks are moving. And this one's staying relatively strong too. Consistent. Clove is still a good swing. Laser 2, if you guys are in laser. I think I mentioned that yesterday. Or one of our members did actually. LABU looks great. Still, again. Alright, after that breakout, this is a nice 270% swing for 3 days. Absolutely on point. XPEV looks nice too. It reached that $11 entry point that we're looking for. Okay, but now it's just intraday consolidation right underneath 11, which is exactly what we want. Right, good consolidation here. We just need market follow through. Okay, we're digesting the move that we just made. Jerome Powell speaks in about 13 minutes. I would say maybe 12. 14 minutes. Let's give him some leeway there. He tends to come out like 45 minutes after 11:30. So he keeps everyone on their toes. That's what he does. That's the only job that he does, you know. Because he's not really saying exactly exactly what needs to be said about the economy and everything. So again, they're not trying to crash the economy, but they're trying to slow down the growth of the economy, which we have been seeing, right? Like the ISM manufacturing numbers that came out today. I'm pretty sure he's going to mention that today, including the JOLTS report as well. So, I mean, they have all morning to prepare. Well, he did. So definitely something that we will be looking out for, and what he says about that, since jobs report is still very, very strong, which they do not want. We've been talking about this for months, right? And they really want to decrease, a loosening, right? A more looser labor market, right? It's very tight. They can't get it to uncoil. Think of it like that. The unemployment rate is at historic lows, right? Basically, there's no unemployment. All right, if you guys remember economics class, all right. I mean, you can't have 0% in unemployment. That's not possible in a capitalistic market. But yeah, we're at historic lows, and basically what we consider low or even zero unemployment, even though the number is not 0%. I think that range of that number is like 3.5 to 3.7%. That's what we consider literally no unemployment in the capitalistic market. I think you only attain or achieve 0% unemployment through true communism. A true communistic society or communist society. All right, the markets are calm. We're not seeing much movement here. Whatever Jerome Powell says, I hope it's good because we want the market to move up higher. But again, remember my bias in the market summary. There is a chance that we can move lower when Jerome Powell is speaking, right? That's what I said. So we have about 10 minutes left here. But who knows? The market might even react positively to him being a little bit hawkish, right? I think I said in the market summary that if I remember correctly, he's going to put an emphasis on the fact that they're not pivoting yet, right? They're still far away from the 2% inflation goal, and there's no way in hell that they will pivot because the markets will react crazily. All right, it'll be reacting very, very crazy if he says the word pivot, right? Yeah, but either way, I'm expecting to be him to be a little bit hawkish on the results today and their decision. I mean, this 2-day deliberation should have given enough room for them to think exactly what they want to see happen with inflation, the overall stock market. They should know that the stock market has been gaining. It gained 6.29% for the month of January. That's huge. That's really, really big. It's one of the best Januaries that we've had since the past 45 years. But yet again, we have a very wishy-washy situation, right? The interest rates look a bit dovish, but Jerome Powell can come out outright by saying he's very hawkish. But guys, my bias is correct so far. We are moving initially higher. Okay? So I'm half right so far. Well, the initial move up was down, but then as the market's priced in what just happened with the interest rates, obviously we moved up and we closed up higher. Here, let me tell it to all the other people in the Discord. I mean, I personally do not want to be correct. Okay, but for my last half of this bias that I've gave you guys on Sunday night, but I'm keeping an open mind. Keeping an open mind is the best thing that you can do in the stock market. Okay, let me silence the music now. Let me go to the live here. We're just gonna be having him talk like this. Okay. And we're gonna watch the markets. Bam. All right, less than 4 minutes left. Less than 4 minutes. It's awfully quiet without the music. I'm over here stressing out while my girl is out doing her nails and her hair done. Two opposite sides of the world, guys. Two opposite sides. You know what I mean? Stressing out here while she chills out. Isn't that the goal, guys? Isn't that the goal? All right, here's the count. This is the countdown right here, guys. If you guys can't see it, or if you guys didn't notice, you guys can put the stream quality to 1080p. By the way, I have upgraded. Who's in the stream here right now? There were 11 people in here at one point. I guess people are too scared, huh? To watch the live stream? Is that it, guys? Is that it? You guys are scared of what Jerome Powell will say? Okay. What are we getting, J Powell? All right, here we go. CNBC is turning on their cameras, and they'll be waiting for like 2 to 3 minutes when Jerome Powell walks out the door to the right. And he's going to go through his papers and begin his opening statement. Let's go, let's go, let's go. This is peak stress time, guys. Peak stress. I am jealous for my woman. She's having fun outside with her friends. Getting her hair and nails done. How lovely. I'll join them later. Alright guys, make sure you guys drink some water, right? Drink some water. You do not want to pass out, okay? No passing out allowed in this live stream, alright? Oh shoot, I forgot, I shouldn't click here. There we go. We could also just listen to him too, so, I mean, if you guys really want to watch. That's why I brought this over to you guys. Here we go. I'm not going to speak during his opening statement. Oh, here we go. Let's go, let's go, let's go. J-Pow.
Good afternoon and welcome. My colleagues and I understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal.
Said this last time.
Over the past year, we've taken forceful actions to tighten the stance of monetary policy.
He looks less stressed.
We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt.
Yep.
Even so, we have more work to do.
Oh.
Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy.
Uh-oh.
Without price stability, the economy does not work for anyone.
Uh-oh.
In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all.
Okay, you said this last time too.
Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet.
Right.
Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%.
Good, that's what they want.
Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%.
Okay.
The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path.
Right.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high.
Complacency, guys. I said
this. The longer the current bout
summary.
of high inflation continues,
and in the Discord,
the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective.
Okay.
At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5 to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
Yeah, but what do you want, Jerome Powell?
We are seeing the effects of our policy
terminal
actions on demand in the most interest-sensitive sectors of the economy, particularly housing.
That's the question of the decade.
It will take
here.
time, however, for the full
Guys,
effects of monetary
what does
restraint to
he
be
want?
realized,
What the hell does he want?
especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases.
Because they're scared. Yep.
Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals
Ooh,
as we determine the
that's positive.
extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation.
All right.
We have been taking forceful steps
right
to
there.
moderate demand so that it comes into
The market
better
reacting a little
alignment with
positively
supply.
too?
Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation.
All right, guys. I think the market is basically telling us that it's not
Reducing
giving a
inflation
shit
is likely to require
anymore.
a period of below-trend
He's saying,
growth and
Jerome Powell is
softening
saying
of labor
exactly the same
market
thing that we listened to.
Restoring
in
price
December.
stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy.
Yeah, he doesn't give a shit. Yeah,
We will
no.
stay the course
The market's
until
not
the
giving a
job
shit
is
about
done.
what he's saying.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public.
Oh, look at the market. Woo!
Fed, we do everything we can to
406.50.
achieve our maximum employment and
Let's
price
go.
goals. Thank you, and I look forward to your questions.
That was quick. Holy crap.
Chris Rugaber, the Associated Press. Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place. In order to
Okay,
bring
guys, it's
inflation
not
down to
over though.
2%.
The
And, of
answers
course,
that he
financial
says will
conditions have
also
tightened
affect the
very
markets.
significantly over the past year.
This is why people don't
I
like
would
him
say that our
talking more.
focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending.
Oh, look at that. Oh, we're going for the moon, guys. We're going for the moon.
Does this at all change your view of how much the unemployment rate would need to go up?
Oh, 408.20 or 0.50 retest incoming.
So I would say it is a good thing that the disinflation
Look at
that
this,
we
guys.
have seen so far
We're going straight up.
has not come at the expense of a weaker labor
Oh,
market.
man.
But I would also say that disinflationary process that you now see underway is really at an early stage.
Oh,
What
Mobilize.
you see is really in the
Everything
goods sector.
is just
you see
boosting
inflation,
higher, guys. Everything
now
is
coming
just going
down,
up,
because
uppity, up,
supply
up.
chains have been fixed. Demand is shifting
Wow,
back
wow.
to services.
Look at Etsy.
and,
Holy crap. It was like
shortages have
133.
been abated. So you see that in the
Excuse me, 134.
in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story.
Oh, SPLK.
The issue is that we
SPLK
have
is
a
up
large sector,
70% now
non-housing
on that
core
position
non-housing services where we don't
trade
see
right
this
there.
inflation yet.
70%
I would
plus.
say that
Oh,
so
and
far
we have so much
what we
time
see
left.
is progress, but without any weakening in labor market conditions.
Has your
Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
We're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting underway, and we continue to get strong labor market data. But we'll update those forecasts in March.
In March, yeah. That's the next FOMC meeting, the second one.
Powell, Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down and that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. What we've seen average hourly earnings and now the employment cost index abating a little bit, still
guys.
Off of their highs. Of 6 months
hopefully you guys
ago,
grasp some
but still at levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently. I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see very high payroll job creation, and quits are still at an elevated level. So by many indicators, the job market is still very strong.
Colby and then Howard. Thank you. Colby Smith with the Financial Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be, and that's obviously back in December. And the median for that was between 5 and 5.25%.
Yeah, well, that's very, very good. Oh my God!
At the March meeting, we're going to update
Carvana, what the heck just happened
today? We did, however, continue
Holy,
to say that
this is a clear winner this week. Oh my God!
Oh
my lordy!
Stance of policy to bring inflation back down to 2%.
The slippage.
We think we've covered a lot of
on
ground,
Monday.
And financial conditions have
This
certainly
has been a
tightened.
huge swing trade.
And I would say
Wow.
We still think there's work to do there.
Wow.
We haven't made a decision on it.
Mobileye going up higher.
I think
nice.
We're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel
Uber.
certainty about,
Uber.
Where that,
Uber's jumping.
That will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time,
everything is popping.
In the other direction,
popping,
we'll
guys.
make data-dependent decisions at coming meetings, of
We're
course.
just pumping, and 408 has been retested. Here we go. Our fourth retest. Oh boy.
Or going beyond that level.
Right, 1, 2,
I guess I would say it this
3,
way.
4. I'm not even listening to Jerome Powell anymore. I mean, he said what he needed to say.
It's very difficult to manage the risk of doing too little and finding
I'll
out in
review it
6 or
later
12
in the day,
months that
but
we
no
actually
more.
work.
No more. All right, let's bring the music back. Oh, the market is ripping. It's ripping its face off. Oh, the shorts. The shorts. Oh, what are we going to do about the shorts? Oh, I feel so bad for you guys. Oh, my God. Holy crap. This run. Woo! I'm up 6% on the day. Jesus. That is huge. Huge run. Holy crap. Oh my God, that SPLK is going crazy. It almost hit, I think it hit triple digits here. Let me see. Oh, we almost did. Oh, we almost did 100. Damn, that was close. Wow. And we got SPLK like right over here. Look at this run, guys. Look at this damn run. Oh, Beautiful. Beautiful. 70% plus. Oh, 75% plus now. An extra 5%. Beautiful. Absolutely beautiful. Congrats, guys. Congrats. The market is straight up ripping its face off. Take some profits, guys. Take some profits. Oh my god, this is a big move. Ooh! Hyped up. I'm hyped up. Jerome Powell has done the deed. He has done the deed. He has completely ripped shorts from their pants and left them naked. That's exactly what happened right now. Holy crap. What a move. Oh, LABU. Oh my god. 25%. This is gonna go higher, guys. This is gonna rip higher. Holy shit. Uber. Wow. Wow. Mobileye going to 41. Holy crap. Monster. What a monster candlestick. Holy crap. And Carvana, as usual. Crazy indeed. CSIQ moving as well. Beautiful. Absolutely beautiful, guys. Jerome Powell, he did it. He did it. He knew the market was going up. The market was leading the Fed. Cathie Wood was right. Cathie Wood. She was correct, guys. She was correct. What a run, guys. Beautiful. Beautiful run. Ah. Kudos. Kudos to Jerome Powell. Kudos. Aren't I glad to be out of my SPY put hedges? Woo! Everything is running, guys. Everything is running. Tomorrow we'll get new entry positions. Oh my god, SPLK hits 100. Wow. Wow, wow, wow. 80%. I might have to take some out. I'm only holding 2. 80% since entering. So I'll be taking out half here. Holy cow. Is everyone following along? This is a crazy move. So if you guys are long in some positions, take profits. This is your chance. Jerome Powell just gave us a good chance to take profits. So don't waste it. Do not waste this opportunity. Take profits. Woo! 410! Oh! Let's go! Let's go! Everything is going up. Oh my god. Oh, LABU, 25% plus. Oh, beautiful. Beautiful. Anything over 10%, guys, is always good. Okay, I've said this multiple times. If you achieve 10% on a day trade, on a swing trade, that's a very, very good percentage. All right, that's really, really good. So don't beat yourself up if you're seeing 10% and if you think that's too small. That is not small. You've achieved a great feat in a very uncertain market. $10, $15, $20, $25. Any of those percentages are good. You've achieved a double-digit return. And that's the reason why I tell you guys to focus on the percentage gain, not the actual profit and loss, the P&L. Okay. Percentages are the most important thing in trading. Do not focus on the P&L. Do not focus on the red and green. All right, we're gonna see a little bit of a consolidation move now since the market is overbought. I didn't even have to check the RSI, but here we are. Get out of here. Oh my god, what a run! What a run, what a run. I was about to fall asleep there for a little bit, but now Jerome Powell has woken me up. Let's go. Let's go. Let's go. Let's go. Let's go. Woohoo! God damn. That was a great run, guys. Wow. Truly spectacular. One of those lifetime moves. Those opportunities that the market gives you here. Well, Jerome Powell gave it to us, essentially. All right, now we have power hour left. I don't think we're going to move that much in power hour after this gargantuan short squeeze here. Now this makes sense. This is the reason why we saw that huge buying coming in at the last hour of yesterday around that 43.50 level. It's probably a bunch of smart money or institutions that just went long yesterday. Near the end there of yesterday, the closing time. Crazy move, guys. Crazy move. Make sure you guys manage. We're probably going to see a retest of 408.50 or around the 408 area. If not, 406.50. Okay. Whatever it is, that'll be good. This is a great run. My God. Uber going off. CSIQ going off. Etsy kind of chilling now. That's good. Etsy has earnings coming up as well. Okay, things have calmed down. I've calmed down. I'm not listening to Jerome Powell anymore. He said exactly what he said last time, and I think that's the reason why the market was kind of saying, forget it. All right, we're seeing a slight lower interest rate hike. All right, it's not a pivot, right? Because we're still increasing interest rates, obviously. You guys have to know the difference, right? We're not cutting, right? We have just lowered how much we're moving up. We're lowering the frequency and intensity of the interest rate hike. That's exactly what it is. All right, we're probably going to see a lot less interest rate hikes as well this year. I think there were 8 last year. Was there 8 or 7? I think it was 8. 7 or 8, I don't remember. Too much information in my head. Wow. What a run, guys. What a run. Holy crap. I tip off my hat to Jerome Powell for making this happen. Hats off to him. Hats off. Uh-oh, here comes the FOMO buying. This is the FOMO buying coming in now. This current candlestick and the previous candlestick was the FOMO buying coming in, and now we're going to see some screwing over of these FOMO buyers. That's exactly what's going to happen here. It's either going to be a complete screw or a partial screw as more FOMO buyers come in. But if we don't get a lot of FOMO buying coming in, then it will be a complete screw of the FOMO buyers. And this is why you don't FOMO. No FOMO, guys. No way. No thank you. We don't like to FOMO around here. Man, this Etsy looks really tight. Very, very tight. Right underneath 139 and 140. Yeah, 139 and 140. Ooh. This looks intriguing. Why are my lines so thick? There we go. So we have a huge area of supply right here. Oh, here it is. FOMO buying. FOMO, FOMO. Man, these Carvana contracts are all, they are pumped up. No thank you. I'm too late for that one now. Oh, Etsy's moving. Because SPY is moving, of course. FOMO buying. There it is. Wow. Everything is pamping. Pamping, pamping, pamping. Oh, I'm tired now. The market got me excited. Way too excited. The dopamine levels have been topped. All right. Oh, CSIQ, look at that. Looking lovely, looking lovely, looking lovely. Guys, again, this is your chance to take profits. think I saw HD moving yesterday too. Where is it? Oh, wow, nice. And SPY is still moving. Yeah, that FOMO buying just really pumping it up on low volume. Oh my god. Etsy went to 139 and 140. Exactly when I showed you guys the technical analysis here. That's funny. That's very funny. You guys saw me draw these lines and it worked out perfectly on Etsy. Jeez. Jesus, man. Yeah, this FOMO buying is pumping everything up, guys, on very low volume. Be careful. We can have a gap down tomorrow. Careful, careful, careful. Be careful. A small gap down and obviously a nice support buy will be great. Ooh, clove. Nice. RKLB back to what? Is it back to like break even right now? Is it? I think so. Yeah, around break even. Not bad. Not bad at all. SPLK. 100. There it is. 100. 100. That golden number. Pump, 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 pump. Let's get to 104. 104 is my next level of resistance. Oh shoot, that's not what I wanted to do. 104. There we go. Wow. What a run today, guys. What a run. Hopefully you guys are taking profits. My number one desire for you all is to take profits. Okay? Do not be staying idle and just saying, oh, I can just hold it. You take profits into strength. That is what we do. That is a rule that you must keep for yourself. And why do you want to keep a rule? Well, that just gives you consistency, right? Perseverance and consistency in the stock market. That's why we do it. That is why we have rules and strategies that we follow. Because they work time and time again, right? So, all right. Pretty good day so far. Ooh, Uber is looking really good into earnings. A lot of inflow coming in as well. I think there's some insider buying as well, if I'm not mistaken. Somewhere here. Somewhere there. Oh, wait. All my semiconductors are jumping up too. Let's see. Let's go down the semiconductor. Holy crap! GFS. Ooh. Oh. 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 Everything just literally just bumped up higher. Oh, semiconductors are obviously getting affected a lot. Makes sense. Ooh, look look at that. SOGSO just went off. Amazing. Wow, look at what that FOMO buying brought in. Let's see if we start flagging now after this candlestick is done. All right. Okay. Okay. Things are shaping up to be very, very good for the rest of this month. When we just started February. Oh, although February tends to be a little bit of a pullback. Any reason puts don't make sense here? Nope. Very good reasons. Takes some puts. We are near closing time, and we can possibly have a small cap down. Yeah, I might take some SPY puts here. Just little tiny ones. Just for not even just maybe just a hedge, but it's not really a hedge because we are seeing that this is a clear uptrend. So it should be considered a hedge. I'm just taking possible extra trade here. Essentially, is what it is. That's what I'm basically looking for. Even more overbought than last time. Then again, the market can always go higher. It has every right to go higher as well. Okay, I got some 400 puts February 3rd at 0.53 per contract. Just a little trade there, all right? Just in the event that we get down, okay? There's a slight possibility, okay? But again, very, very cheap premium per contract, so don't trip on it. Oops, is that poor? There we go. Oh, I'm up about, wait. I'm up 12% already. Oh, 10% since entry. Sorry, 10%, not 12. 10%. Just found the cheapest contracts that kind of work out here for us. So I chose 400. Why not? Cheap. It expires in next Monday. I mean, not next Monday. I meant Friday. Jesus Christ. On Friday, guys. On Friday. That's what I meant. Not next Monday. On Friday. Okay, we're just calming down, guys. Nothing else much going on. We have about what is it? 43 minutes left? Yeah, 43 minutes left until the market closes. Oh! We're right back to my entry point for my contracts. Okay, so I got my 400 puts. I got them all the way over here. What the hell's going on? I got them up like right over here, like 411. It's part of the data. Yeah, it's part of the data. Well, I chose this one, so it's my fault. But again, I'm not tripping here for this one. It's one position to the other side of all my rest of my positions, right? Compared to the long positions that I have. So no worries, no worries, no worries. And it's only $50 per contract, right? $53 per contract. Right now it's at 50 to 51, I think, is where it's ranging at. 50 to 51. So no biggie, no biggie. Don't trip. If you gap down tomorrow, or if you don't trip. A gap up will be even better for our long-term contracts. Everything that we've been swinging so far. Okay. This is some ethereal music. What have I turned on here? The playlist. I like it though. Nice. Very calming. Oh, we're getting even more from buying here. That's surprising. Oh, we're getting stair-stepping down of the volume, as you guys just saw in the 15-minute time frame. That's the reason why I know it's FOMO buying. But at the same time, it could also be people who are the volume can also be attributed to people who are taking short positions and getting squeezed out too. So that's another reason why we could be pumping up higher. There are many reasons, multiple reasons. And that's the reason why volume isn't too good of an indication for anything, usually. It's just a nice... it is an indicator. It's a nice indicator to determine if your breakout is going to be holding. Right? Just like MBLY. We saw the volume increasing yesterday. Okay? And so now we're getting even more volume into new all-time highs, and we're consistently making new all-time highs. So that's how I know, right? That's how I know that I want to buy every single pullback on this name, because this one's ready to continue to move up higher, and it'll just continue to move up higher and higher and higher. So any pullback, I'm going to buy. I want to see 408.50. Yes. What was that since? Ooh. Oh, Snap is up. Snap is up 20%. Snap, 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 snap. Okay, I think we're just gonna chill out now. We have almost 30 minutes, well, a little over 30 minutes left. Oh, God, I gotta fix my chair. Just get a new one. Oh my God, Carvana, what the hell? Jesus Christ. Holy mother of God. Now this one looks interesting for a short. You guys see how bias works? Or not? Do you guys remember me saying that I'm going to be once I get in this one again, I'm gonna write it all the way up to like $20. Well, I didn't really say a name. I didn't really say what you call it. I didn't really say a price, but again, it's funny how bias works. Because I said that this one should have a nice squeeze, a multi-day or week squeeze. Alright. What are we gonna get here? What? Carvana's still pumping though. That's crazy. Is that crazy? No, that's not crazy. What a breakout though. Crazy. That's crazy. Okay, well, things are calming down. I am interested in Etsy though. This is looking like a very nice good breakout level, around 140. Oh, these are my old entries. Don't take mine on that. What else? SPY still trying to hold up here. That's going up with lower volume. FOMO buying. FOMO. Not want to get caught up in that, especially because you might be a little too late for an entry, right? Because you don't know where the stock price will go next. That's the reason why you don't try to rush into anything, or else you'll be trapped. You'll be trapped. Essentially, what happens. Oh, Etsy's at 140. We're riding the 10 SMA really well. Let's see if we can go to the 21 SMA as well. Ooh, we are squeezing though. Still trying to squeeze. This is a really good run. Nice. Ooh, Etsy's above 140 now. Okay, less than 30 minutes now. Less than 30 minutes. All right. I have nothing to say here. I literally don't have anything to say. The market's getting very tight now, so we're moving very small in small increments. Look at these little guys. CSIQ and Uber. Very nice. It's nice to see the names running. When you're not in them, it's fine. It's great to see them running, regardless. This is how people FOMO, and then they, you know, and they blow up their accounts because they're trying to grab something that's already too late for an entry point. Right? If you lost the entry point, then just don't get it. It's as simple as that. Don't FOMO. What's the point in that? Trust me, you'll find entry points later down the road. All right. Later on, you'll find entry points. I can guarantee that 100%. And that's a great thing about the market. The market will always be here if the world is still alive. That's how much reassurance that I can give you guys. It's the most reassurance that I can give you guys. Ooh, my SPY put is down 20% now. Okay, our size at 80. This is where things get a little bit crazy. Crazy as in we're gonna see a lot of selling going in, or we're gonna get just absolutely no movement, and overnight we're gonna get a gap down. I tend to see that a lot, so be careful, guys. Be careful. Okay, 412, 412, 412. Are we gonna get that? Oh, we did. 412 right now. 412.06. Still moving higher. 412.08. Things are slightly boring now. Well, everything's in the uptrend still. My long positions are all up, 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 up. Oh, okay. This is the real form of buying now. We're just setting up for them in the last two 15-minute candlesticks. Ah. We really were just setting them up. Ain't no way we don't dump last 10 minutes. It could be possible. Ooh, LBU. Those are at 35 now. 35. %, 40%. Never mind. Oh my god, 413. Woo! We love rockets, don't we? Look at that, LBU finally breaking above 8.70 or 8.75. Very nice, very nice, very nice. Everything is moving up higher. Yes, 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 yes. Oh, finally. we're getting some great relief from a potential, outcome of this rally turning into a bear market rally, right? But now I think we completely confirmed that this is not your typical bear market rally. This is weekly time frame. My God. It's a picture perfect weekly time frame. That's what it is. Even the monthly, guys. Oh, so good. So good. We can retest 415 or 416 in the next few days, depending on how much we digest tomorrow. The move is a great move. Okay, I'm gonna add some more puts here. Okay, so 0.30 for contracts is where I'm filled. Again, my peace of mind is more important than whatever dollar amount there is in each contract or in each position. Remember that, guys. That's the most important thing. Don't forget. Do not forget. A monthly level at 14.50. Okay. 19 minutes left. 19 minutes left. These big braces are breaking out now. Ooh, lemon is so tight. Oh, it's working for earnings though. No, thank you. Oops. H. Nice. A lot of stocks are squeezing. Well, squeeze candidates have been squeezing. Good here, still running. Firm. Oh, EPST is what I meant. EPS. Yep. Yeah, look at that. Everything is running still. All the squeeze candidates are running. Also, that EPS looked interesting. What did I draw there? Oh, I did draw a flag. Ooh. Look at that, guys. I drew this even before the flag formed. Wow. Sometimes I'm even surprised at my technical analysis skills. like I'm seeing the future. It's very odd. What is Snap doing? Snappy snap snap snap. Well, that's not bad. Okay, this is the true spot where we calm down. And we'll get on Snap too, to be honest. You know, it's still bad earnings numbers, right? And usually stocks don't tend to have a nice run after earnings. Really bad earnings, especially with the gap down. So yeah, I mean it's up 25%. So I'll just take it here, to be honest. Yeah, 25%. Good, 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 good. Very good. We're looking hot for tomorrow. And we're just in the middle of the week. Just in the middle of the week. Our last 15 minutes. Last 15 minutes. Do what you gotta do. Yeah, I should expect a nice red candlestick to end the day here. I mean, to see more of a pop, that's kind of crazy. That's gonna overextend the gains that we made today. Too much, in fact. Way too much. So, that's not what we want to see. We do not want to see that, guys. Remember that. Oh, those puts are going back up. Nice, nice, nice. Not bad, not bad. If we make another run here, that's going to increase our probability of a gap down tomorrow. And I don't want that. Remember, a healthy run is better. I mean, this is a pretty nice run up. It's not unhealthy here. It's just the intraday is getting a bit overextended. But again, I don't want this to extend to tomorrow. It's just a catalyst-based run here. All based on emotion. So don't get caught up in it. Do not get caught up. Never. Never, never, never. I think Carvana's gonna fall back down tomorrow below the 200 SMA. Maybe hit $12 tomorrow, or 12.50 at least. That'll be nice. Be a nice sight to see. Since we are overextending on the daily. Ooh, it's the most that we've been overbought since the previous time that we were overbought. What about this high point here? That's 80. Ooh. Surprising. Alright, last 10 minutes. Last 10 minutes. Make your plays. Make your plays. Take profits. Do whatever you need to do. Do something. Ah, my put position is up. Surprising. Less than 8 minutes. Less than 8 minutes. Yeah, I think I'm just gonna keep these SPY puts as a hedge. I don't think I'm gonna take them off. No need to. I have my rest of my long positions to really just help me stay above my profits today so far. So, oh, let's see. Right back to 139. That's what I want. That's what I want to see here, though. That's what I want to see. Everything looks good. Everything's great. Everything is chilling. All right, 5 minutes. Less than 5 minutes. Okay, guys. Well, I think I'm off for today. Oh, oh man. Oh, yeah, sat on the chair for too long. Oh, Mobileye. Just went to 42. Amazing. Oh, that's a nasty rejection at 8.75 for LABU. Oh, its time will come. Its time will come. Huh. Parking lot, that's interesting. Oh, where's sell-off? Rocket Lab. Okay, 2 more minutes and we're done for the day. Carvana, I kind of want to short this, but I'll wait for tomorrow. I'm sure we'll move back down tomorrow for Carvana. The market's probably a slight pullback. Let's see, it's looking so good. Yeah, this one's shaping out to be a good swing trade. Very tight, coiling. Nice inverse head and shoulders. Very good. All right, that is it, guys. How much did that pay for your puts for SPY, Miner? What was it? It was like 53 and then, what do you call it? 33. No, 53 and 30. Sorry, 53 and 30. Initial was 53 and then my ad was 30. Yeah, you can check it out in the Discord. Yes. All right, that is it for today. I'll see you guys tomorrow. I'll check you guys back in the Discord actually. I'll give you guys some updates into SPY futures. It's gonna close in about 2 hours, so I'll see you guys back on there. Thank you guys so much for watching. Hopefully this was a very enjoyable stream.